about the AFTA, for example, the Africa Trade Agreement, the Africa Continental Free Trade Agreement. You can see that it's starting to open markets we haven't been to before, and it's helping us to actually be competitive and price competitively. And I think if you look at where we are growing, we've been focusing a lot into Europe, we've been focusing a bit into the US, but the rest of the world is looking at Africa, but South Africans need to get into Africa. And I think that's the market that we need to grow into, that's the market we need to spread into. And I think there's a lot that is available for us to take into the market.
Interesting that you say that, because Denise, and a comment that I came across on X, made by Michael Jordan, of course, a former FNB CEO, just the other day, was people say wine exporters should find new markets, but if it was so easy, we would have done so a long time ago. So that infers that there isn't a quick solution here, and that the market access doesn't simply open up overnight. So when it comes to the automotive market, let's extract from that and extrapolate. Do you share the sentiment? And if you do, what are those key constraints right now that are inhibiting what Melanie says we should be doing?
Yeah, so switching markets doesn't happen overnight, and I think when players enter the market, that's a decision, that's a long-term decision, and also when they leave, they make that decision a couple of years before the time. It doesn't just happen on the spot. But I think what we've spoken about today in terms of tariffs and imports, cheap imports coming into the market and so on, we lose sight of what truly could make us competitive, and it starts with the basics, getting the basics in place. And if you look at the state of municipalities, for example, around the country, we need delivery of water, electricity, sanitation services, and so on. And I think where we're truly special in Nelson Mandela Bay is we've been able to mobilize our business community to work together, because we still want to be here, because there's a lot of strengths in terms of the people, I think, are the greatest strength, but our skills, our innovation, our agility. And what we've done is we've actually mobilized the business community into geographic clusters, where so most of your commercial and industrial areas in the city and your businesses are working together to address the issues in their immediate operating environment. Because if you don't have reliable power, for example, then you can't manufacture. So we've been fixing infrastructure, we've been doing all sorts of things that we probably shouldn't be doing as business, but we're doing it because we still want to be here, we're holding the line. And we're trying to focus on solutions and also drive collaboration with other stakeholders to get there.
I said we've got Michelle on the panel today, so we'll be getting to that in just a bit. But before we do, Denise, trade policy, let's take a look at that. How do we negotiate now terms, trade terms, because that is more important than ever, right? Where we need to be moving away from what seems to have been set up as political partnerships more so than trading partnerships. A lot of focus on regional trading blocks, and we hear the incentive that comes with that, whether that be the African Continental Free Trade Area, BRICS for that matter, but perhaps the approach needing to be more bilateral.
Absolutely, and I think we've almost heard the point today, you can't just switch markets overnight, and we're agnostic about who we should do trade with. But I think what we need to look at is we can't just be a country where we're sending out raw materials. We must also be doing beneficiation, and we need to protect our manufacturing. We can't allow deindustrialization to happen. And I think we also need to look at our existing partnerships. So if you look at the European Partnership Agreement, Europe remains a key market for us. We need to continue to strengthen that, especially Eastern Europe. And then I think Southeast Asia holds a lot of potential for us as well. So, so those markets are important too. It's not just BRICS. I think BRICS, we need to get into free trade agreements with them. And we need to look at what our strengths are. And I think when you look at the scale of what's coming in terms of China, we need to have a niche positioning. And a lot of our thinking, we've got a local economy reinvention think tank where we've pulled in engineers and out-of-the-box thinkers from around different companies in the Bay, in automotive and pharmaceuticals and other sectors. And we think that we could be a low-carbon manufacturing and export space globally. And that's what we need to position ourselves. And we're working on various projects. For example, if you take something like hemp, we've done some experimentation where you can actually do door liners, boot liners, etc. made out of hemp. So you involve the agriculture sector, which is a strength we have, and the auto industry, and those are the kind of components that you could export globally. And that's the kind of experimentation we need to do. We need to reinvent and we need to move fast.
How open is a financier like Standard Bank to this experimentation, Latando? I mean, we're going to fully exploit, the opportunities and trade agreements to scale exports. What financing instruments are actually in place to accelerate cross-border trade flows, for export-ready firms?
Yeah, so expected of the banker to come in the finance conversation, but interestingly for us, we beyond that look at also the value chain, and the industries are represented very well here in terms of the value chain, and that's very important because when we do structure a deal, whether it's trade finance, what's embedded in trade finance, with working capital, this is increasingly becoming important as to what is the actual value chain, where the products going to if you're exporting, where the products coming from, and in terms of the growth and what's being imported is becoming more important. And in terms of the growing projection, but also what we're seeing prioritized by the AFCFTA agreement, I share this already. We cannot ignore the region, the rest of Africa. And I think with the tariffs of 30% today and they change it tomorrow to 10, it still remains an imperative. And this country, this auto sector is still the big brother on the continent. I mean, there's great things coming out of Morocco. They've propelled quite a bit in terms of fast-tracking, not just the auto production, but the logistics around it. Quite a lot of investments in 10 years. But this is still the market where the skills base, is richer. And in terms of certainly from an innovative shift that has been there. So for us as a financier, those are the trends that becomes very important because I think we can talk financing and general markets, but in the region, that's where we get really excited, and that's where we really take a bold step because we've been in the rest of like over 30 years having presence in trading markets. So that's where not just financing but also our own expertise becomes very important. I think.
What are some of the risks that you're keeping front of mind here, and how are you helping clients actually manage these, the risks that they face going into these markets so that they can afford to confidently expand?
Yeah. So I think one of the things to very directly call out with risks, and I know that generally and historically, whenever you think about other African markets, it's always related by risk, but I want to call that out that actually it's a massive opportunity. I think in the past, certainly from a policy and a certainty of policy, whether it's taxation or even policies that affect FX handling, which can impact the liquidity in some markets. That's probably one thing that I have to call out particularly. And I think what you're seeing is happening in Mozambique right now, and also Nigeria, but they've come out of it with the new central bank governor. So I think the FX liquidity and some of the regulation that kind of changed very sporadically. If you think of Zimbabwe in the past couple of years and even Angola, but it is getting better with time. If we look at historic trend, it's certainly becoming more certain, it's certainly becoming more open, and I think that speaks to the direction that some of these markets are taking to create a more certain environment. So that's the one call-out risk I'll mention. And around just policy direction, and I think if we even look at a DRC that's made some exciting announcements for the auto sector around what they're enabling. You're starting to see how, I heard a copy and paste in the panel earlier, but you're starting to see how even whether they copy from an SA or other markets, there's certainly a shift that's starting to create a more stable and certain environment for investors, for other players that want to get into that market, not just supply the market. So that's sort of the major risk that we foresee. And then, I think for historical years, we always know that conflict or peace and security has been an issue. And right now, probably more recently, it's the first time in a couple of years that we've had a bit of that in the east of DRC. But outside of that, the region has been relatively stable. And even with global pandemics, we've seen actually a very resilient continent respond to that. So I think that speaks to just what you find when you're entering other African markets around stability, which I think often is understated, and we hear more of the risk story. So that's sort of the risk that we very familiar with, and we've helped some of our clients navigate those, especially around, when it comes to the FX.
Navigate the risk to leverage the opportunity. The thing is, Michelle, that export growth means nothing, right, without efficient, reliable logistics that can actually get products to market timelessly. So, what are Transnet's current priorities, and what concrete steps are actually being taken to improve port and freight infrastructure to ensure global competitiveness, particularly for high-volume industrial sectors like automotive?
Sure.
Give us your top 3 priorities, because there's a ticking clock here, and I know you've got many.
Yeah, no, but thank you very much for the question and for the opportunity. It's an important one. This business means a lot to Transnet. I always say to my people, it's the one area probably that I can use as an example where it's a complete cycle. You've got local manufacturers of components, you've got imports of components, we take it to your factories, you build your cars, and then we export it, right? It's not like these raw materials that we are only exporting, we're actually building. And that's the one way to grow the economy. In fact, probably the best way is to make things, right? So we have to keep you making things, right? Now, you're all aware of the challenges that we've experienced. I'm not going to talk about that because I believe, and I'm hearing that people are beginning to feel the positive.
You said to me earlier you're getting a lot less complaints.
I'm getting a lot less complaints, yes. So look, the priority, in fact, over the last 2 years, it's really been about spending and investing on rehabilitation of the network, right? Everybody, we've been talking about the fact that we didn't have equipment in the ports, the fact that the rail network itself has been degraded, there's not been maintenance. We've been spending a lot of money just trying to get the network up to standards, right? Why? We need to get your product to you on time so that you can do what you do best. Now, at the same time, you'll see that over the next 5 years, Transnet will be spending about 127 billion rand borrowed money on this network. But we will spend it, and we will spend it wisely. By far, the majority of that is going to go into the network and making sure that we have the network at the right standard. And why is that? Also because historically, you know that we are busy with the reform, which is another one of our priorities. We will be introducing private train operators onto this network, okay? So I don't want to say too much about that. I'm going to leave that to the minister, but she'll probably make an announcement within the next week or 2, right? So we're going to have private train operators also operating on this network. The idea there is to make sure that as a country, we move more volume collectively, right? Transnet has its role to play. We cannot be everything to everyone. We will do the best with what we have and where we are at, and we are now going to have the private sector involved with us, also working towards moving these commodities in and out of the country. Now, the other one that is important for us is this uninterrupted flow of commodities, right? We're spending a lot of time together with our customers, collaborating with them to protect the network, because unfortunately we are attacked on a daily basis by criminals who do not want us to do what we are doing. We're continuing to push that, and we're spending money in that direction. So a lot of work in terms of performance-based corridor incentives and initiatives with our customers, working together. We can't do it on our own. We need our customers and our service providers to support us. If I can take an example, one of the projects that we're working on at the moment, for which government has given us money, is what we call Project Gqeberha. It is an industry solution for the auto industry. We talk about the corridor from Gauteng to Gqeberha, to the Eastern Cape. Industry solution, not a customer solution. We need all of your OEMs to come on board. If we bring Fords down to the Eastern Cape, we need to move up VWs and Isuzus and the like to the area. And we're going to spend that money. In fact, we are starting to spend that money, and if we don't spend it, it's going to go elsewhere. Okay, so it's very important that we spend that money. Otherwise, we're going to move manganese Eastern Cape. Okay, so we need to spend that money. It is intended for the auto corridor, and we need to do that. That's another one of our priorities. But essentially, we are trying to move your products in and out. We need to make sure that the exports are that we can compete globally. because we know you don't compete as a factory in South Africa, you compete as a country, and we want to support you in doing all of that. So yeah, a lot going on.
Yeah, luckily we've got a partner here. Well, Andy, let's bring you into the conversation at this point, because lots of talk, right, about collaboration and that needing to happen to unlock things a little bit more effectively than we've seen up to this point. It's about leveraging partnerships at the end of the day, thinking collaboratively. So how can logistics providers better support automotive suppliers in navigating some of the bottlenecks that they face when it comes to reaching their markets cost effectively and reliably?
I think one thing that's starting to be encouraging us, certainly us as Business International Logistics, we see it. I think our competitors are starting to see it. We no longer see our customers looking at us as just service providers. There's an understanding that we are partners. There's an understanding that you cannot start a strategy around growing your business and moving your cargo without having a logistics service provider in the room. I think it's starting to become quite an important thing. And I think some of the things that we've done to support our customers, the logistics players do to support their customers. One, again, is to actually help them with landed costs. You know, how do you actually take your sorry.
No stress.
Just need to relax a bit. Okay.
So we're talking around, impact on costs and how logistics players can come to the fore in terms of supporting that cost base, lowering that cost base, and perhaps some of the innovative solutions that we can put on the table to support that agenda.
Okay. Yeah. So maybe I'll talk about a few things. So, for example, in terms of some of the things that we've done. So, for example, we are an accredited and authorized economic operator as a business. Really, it's something that ensures that the movement of cargo, it moves a bit faster. You don't have a lot of stops, you don't have a lot of inspections. That's what we've done for our customers. We actually assist them to get accredited and become authorized economic operators. We've worked with our customers, for example, to help them reduce their landed costs by actually working out what is the best tariffs. So we help them with tariff determination. We help them to excuse me.
Okay, we will come back to you. Take a breath there. And Michelle, we're talking about these untapped markets, right? So, but it often means new trade routes. It means new destinations as well. Given the strategic importance that's being placed specifically on the African continental free trade area, let's use that scenario. How are you actually working to strengthen cross-border freight connectivity and unlock these new corridors for intra-African trade?
It's a timely question, right? With everything, we get up in the morning and we don't know what Mr. Trump's going to do. So, this whole thing with the tariffs, I think that specifically for African countries and for South Africa, we have to respond, right? But we should not be responding by retreating. I think we have the African Free Trade Continental Agreement. I think this is what I want to call, we need to show some regional resilience, right? So the agreement is there, and I think it is a wake-up call for us to accelerate the implementation of the African Free Trade, Continental Free Trade Area, right? And Transnet, we want to play a very important catalytic role in doing that. We've been trading with the regions and moving trains up and down, but we have to improve the way our borders operate. We have to ensure that we've got what we call seamless trains moving through the various countries. We have to move product from road to rail. Rail is by far the best mode of transport into the region. And in order to do that, the kind of work that we are doing with our borders, with neighboring countries, whether it be Zimbabwe, Mozambique, etc., we're moving product in and out. But we have to find ways, innovative ways, to make that movement easier and more seamless. because we are spending too much time moving trains, right? We can do that faster, and I think that it's definitely, I mean, it's a market that we need to get into, and we need to, well, in fact, we are there, but we need to accelerate the improvement in the way we do business with the region. I can say to you that, you know, from a transit perspective, we have just been in the market with what we call a leasing company. I mean, we lease locomotives and rolling stock to the region. What we want to do now with private operators coming onto our network is to lease to private operators, because we know it's going to be expensive for them to get access. We want to be able to get them onto the network and make this available for us, and that will go, you know, through the different countries the way we would want it to be. But I think, you know, it's been a wake-up call for us with the tariffs. Yeah. I think it's time for us as South Africans and logistics service providers, OEMs, to not only dialogue, you know, but actually partner on the delivery of these initiatives. That, I think, is going to take us a few steps forward.
Marshall, do you like what you're hearing? I mean, what immediate interventions would remove the most friction from moving components to global customers?
Maybe I should speak on behalf of all automotive industry. I've got something to say, Michelle.
Please, no. Not today.
Michelle, we've seen over the last couple of months vast improvement on
Yes, thank you.
I wasn't really that bad. So, no, we really have. And supply chain has been our biggest problem for probably 3-4 years. In fact, since COVID, we've never really come right. And we only seen the improvement now. But and it's not just us; it's a global issue. Yeah. Luckily, again, our resilience as component manufacturers is these problems exist, and you learn how to work around them. It comes at cost, but at least we react quickly. That's what we do. But it's nice to see that our stakeholders are helping us to move forward.
So get the logistics of it right, Marshall. How aligned are South Africa's component manufacturers, would you say, with global OEM requirements to secure a larger share of the international supply chain? And I mean, we're talking here about, you know, positioning South Africa's components as high value, high quality alternatives in what is a very competitive global scene.
So I'm not going to sell my company, although we also does. But just to give an example of why has my market grown 30% in the last 2 years? It's because there are so many auto manufacturers out there now. The ranges are vast, but the volumes, I mean, the parts are the same. There are 8 million cars a year. So the volumes per part number are getting less and less and less. We found, so my competition are 70 other plants around the world. We are 100,000 people. But they're very highly automated, highly skilled, all the rest. But they can't use low volume production. So we've been struggling for years with low volumes, and that's why we've become very lean, we've become cheap, cost effective. And we are getting now, as the volumes drop globally, and it's not cost effective for other countries to make it, South Africa can. As I said, we've closed 3 plants now in the last 2 years. South Africa got all the business. So.
Yeah, and that's then giving us an idea, Denise, of some of the capabilities, but also the unique market and structural features that we could be using to our benefit, right? So talk us through that, because Nelson Mandela Bay, of course, at the heart of South Africa's automotive manufacturing sector. Is the region supplier base export ready to diversify products? And I know you alluded to it because you spoke to some products that are just ready.
I think we've got world-class capabilities, and we've demonstrated it, and we've got the skills. And I know the minister earlier spoke about companies like Gqeberha and Escort, so the innovation is there. And I think the fact that we've got a IDZ, 2 ports, a deep water port, that's all big. No, we have a lot of advantages. And if you look at like the hydrogen project that's coming to the Kuka IDZ, that would be the biggest inward investment ever into South Africa at 109 billion rand.